Hey Ross World, today we will go over Wealthfront. That's money up front. Not exactly. It's still an investment app. It's slightly different than the other ones we have went over before. This one, and before you skip this video, has a $500 minimum deposit. And I'm going to tell you why it's better than Betterment. Slightly different than Stash. Of course, different from Robinhood because we're still talking about ETFs, exchange traded funds. But let me tell you, over the course of time and starting off, that 500 minimum deposit is really not a big thing. You're thinking that's a lot of money up front, but we're going to go to the computer and show you exactly what I mean. Now that we're on the computer, we're going to quickly go over Wealthfront. We're going to do a slight comparison, but let's focus on Wealthfront, okay? I'm at www.nerdwallet.com, one of the best investment and information tools on the internet. From the start, Wealthfront is best for hands-off investors. What does that mean? They do auto balancing. They actually manage your account for you. They move your money for the best optimization for taxes and for establishing and building wealth. Free management on small balances. There you have it, under $10,000. And we'll go over there in the chart below. Taxable accounts. You want the IRS, you want the federal government to get their money first. So when you take your money out, it's your money. And redundant, automatic rebalancing. Then they have those different options I was referring to. The 529 college savings plan for your young ones, your adolescents, your teenagers, building for their college future. Let's look at the ratings here. Account management fee, 4-star rating. For the first $10,000, they manage your money for free, optimization, moving it so you make the best possible earnings. Investment expense ratios. ETF expense ratios average only 0.12%. Portfolio, another 4 stars. From 11 asset classes, 11 options. This is phenomenal. Account minimum, $500. Now for all the options that they actually offer, $500 is nothing. And guess what? That $500 is yours. You're not paying them for this. Zero commission. You're not paying them. That's your $500. They simply want you to start with. They want to make sure you're serious because they're serious about making you money. Account fees, annual transfers, and closing. Guess what? Zero, none, nada. You pay nothing. Account supported, another 5-star. Individual and joint, in case you want to do it with your wife. Roth IRAs, traditional. SEPs for businesses. That's SEP actually means self-employment, okay? And rollovers to IRAs and trusts. 529 college plans for your teenagers about to go to college, or you really want to start off really young, around 3-4 years old, okay? Then tax strategy, another 5-star. Daily tax loss harvesting on all taxable accounts. Direct indexing, so on and so forth. Automatic rebalancing, free on all accounts. Customer support, they really need a little work there. The hours need to be a little more broad spread, but if you notice, they're trying to cater those people who are getting home around 5 and they have 3 hours. Some people in the market would like to see a little more time there so they can actually call them either overseas or work early in the morning. Now, moving right along, here's just a quick glimpse, a quick synopsis of how they diversify certain investment portfolios, whether it be U.S. stocks, foreign, emerging, dividends, and then your bonds, and so on and so forth, and also your natural resources. Okay, that may not mean nothing to you, but some people like that analytical data, okay, that little bit of research. Now we're getting into the meat and potatoes of it all. Management fees. We're going into that flat fee structure. A slight comparison to Betterment, but we're going to focus on Wealthfront. Balances of $10,000 and under are simply managed for free, absolutely free. Okay, balances of $10,000 and $1 or more are now being charged 0.25% annual advisory fee, okay, compared to Betterment, that first initial one, which they had those 3 different plans. Betterment Digital, doesn't matter how much you have, you're going to pay 0.25% annual advisory fee, and includes online advice. So you're saying 500 minimum deposit, but you're not going to be charged up until $10,000, whereas though you deposit $100 in Betterment, you're still going to be charged that 0.25%. Understand the savings in that. And now as we look further into it, now we're going to do a slight comparison between Wealthfront and Betterment to understand why I'm giving the advice that I'm giving, that Wealthfront, in my opinion, is better early on than Betterment. Let's look across the board. Annual fee for account balances 10 and under, zero, zilch. With Betterment, is 0.25%, and what does that cost you? $25 a year. Now, once you get to $75,000, then they charge you because you're what? You're over that $10,000 mark. You're paying 0.25%, and it only costs you $150 compared to Betterment, $187.50. You get to $100,000. Wealthfront is only $212.50 a year. What the cost for Betterment? $250. Now we're going to get to the cost and the difference here. Once you get to 2 million, or as they have it here, 2.5 million, 0.25%. What's the cost? $6,212.50 compared to Betterment. That percentages go down because now it is waived. That fee is waived on accounts over $2 million. So you save a whopping $1,212.50 once you switch over to Betterment from Wealthfront when you become a millionaire. Okay, moving right along. What does Wealthfront actually have to offer? Now, the account types we already went over, but let's get down to another slight comparison. Human advisors. Wealthfront has none, Betterment does. Some people actually like that, but they do have the automatic rebalancing. Great. They're going to manage your account for you, move your money, optimizing so you make money, so on and so forth. You see it. Goal-based savings, no. Betterment does have it based on goals, but you can kind of finagle the system with their optimization and their programs with their portfolios in order for you to make your own goals. They just simply have it laid out in Betterment just a little bit better. But when we're talking about dollar signs here, starting off, if you're not already at that $2 million mark, Wealthfront is better. So my only question now is, when you're coming to www.wealthfront.com to start and open your account, to start saving you lots of money with only $500, and in a lot of aspects, it's much better starting off with Wealthfront than it is Betterment. And there's a lot of things you need to understand, little things that really matter, those big money points, simply like this. Flat 0.25% on accounts that are over $10,000. Your first $10,000 are managed free. No trading commission or hidden fees, and you have portfolios of low cost ETFs. I encourage you to go over, do your research, go through their website, but we have to get back to the camera so I can close out this video so you guys can go and start to establish your wealth. So we're back from the computer, and now you see the big difference between Stash, Wealthfront, and Betterment. In my opinion, Wealthfront is better, especially starting off, because you saw in Betterment, the account percentages of the amount that it will charge you doesn't get better until $2 million, okay? A lot more than some Korean won. $2 million. So initially you would think, hey, I can go in with Betterment and pay the $100 a month to keep my account going, but you're being charged 0.25%. Now, I know that I gave you information on Betterment because diversification, it's still a way. But my opinion, Wealthfront is better because, yeah, you may drop a half a G, but over the course of time, up until $10,000, it's your best choice. Okay, so if you have any questions, leave it in the comment. Don't forget Ross World. Subscribe. My money makes money. Ross World out. Front to establish your wealth.